Hello, welcome to this week's live stream. I'm David Jones from Capital.com. As usual, if we can just make sure that everything's working at your end, hopefully the audio is all fine, and you can see what I'm looking at on my screen. But if someone in the chat could just say that the audio is fine, then that'd be great. That puts my mind at rest. So we do this every week now, and it's quite an informal chat, I suppose, about what's going on in markets. We have a look at the major events that are due out next week in markets, the major news events. I'll talk about markets that I think are interesting. So we'll look at lots of different markets, currencies, indices, commodities, Bitcoin, and then I'll go into the questions, and I'll go through and answer any questions, any markets that people want looking at. So if there is a market you want looking at that we don't normally cover, if you put it in the chat, we'll cover it. Don't spam the chat with the same market all the time. We will get to it. If it's in the chat, we normally get to it. I'll get to those in about 20 minutes time. Risk warning as usual. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accepts no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 71.2% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Okay, our special offer of the day. We always do an offer on these things. Today, if you're a client of ours or you open an account this afternoon and you start trading, I picked the Nasdaq this week. I thought the Nasdaq would be a good one because it's fallen 10% from its highs. People talking about correction, blah, 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 blah. The market's bounced back. I think it's always an interesting market. So we're doing zero spread on the Nasdaq today till 6 o'clock UTC, which is 6 o'clock UK time, isn't it? In proper time. Right. Let's. It's been a really interesting week. We saw that bill passed, the $1.9 trillion stimulus bill passed. I don't think that was a surprise that was going to pass, and I think we did see. I saw the trades I was in do well yesterday, and they've given back a bit overnight. So I wonder if there's an element of not really being a surprise, the bill yesterday. But let's look at that in a second. So important events for next week, 15th of March, Monday, China retail sales, 9th of March, I put the wrong date in there, it should be the 16th of March, obviously. Reserve Bank of Australia meeting minutes, so the Central Bank of Australia. I think, central banks are back in focus again now because of concerns about potentially inflation. So we've got minutes from the Australian Central Bank Tuesday morning, US retail sales in the afternoon. 17th of March, US interest rate decision next Wednesday. That's a big one. Wednesday evening UK time. I mean, I'm guessing no change is expected from the Federal Reserve, but it will be interesting because we've seen these bond yields jump in recent weeks that have had spooked markets, again because of maybe inflation concerns further down the line. So I think that would be an interesting one next Wednesday. And then next Thursday, the UK interest rate. So Bank of England next Thursday. Again, no surprises expected, no changes expected, but it's always interesting, the press release, what the chat is, what the narrative is from these central banks around all of this stuff. So let's see. A quick sum up of markets, then we'll get into them and look at them on the charts. We did a Nasdaq video earlier this week. I should say, of course, if you're watching this and you are not subscribed to our channel, if you could subscribe to our channel. But one of the videos we did this week was on the Nasdaq, and my mouse has just decided to die. Do you know, everything works really smoothly all week, and whenever I do one of these sessions, all my technology decides to die. We did do a Nasdaq video this week by the dip, and that trade's proved to be a pretty good one so far. But there was a lot of talk about the Nasdaq being in a correction because it had slid 10%. I think these labels, correction, bear market, bull market, pretty meaningless to be honest. But the Nasdaq has bounced back really strongly this week. The tech stocks have bounced back strongly. I'm sure we'll have a look at Tesla today as well. Lots of volatility in those. And last night, of course, the S&P and the Dow Jones, the broader US stock markets hit fresh all-time highs. The DAX, the German market, hit fresh all-time highs this week. We'll take a look at all of those. Gold and silver, boring this week. We'll have a look at them. But they had a little bit of excitement, but they've given back some of those gains. Pretty boring. Bitcoin retests the February all-time high. I wrote this morning. I'm not quite sure where it is since then. We'll take a look. But was having a look at that 58,000 level, Bitcoin. So we'll take a look at that as well. Crude oil. We did the crude oil video yesterday. Went out yesterday, last night. It seems quite incredible, but on crude oil, are we going to be seeing $70 a barrel soon on crude? Anyway, best levels on crude since October 2018. So quite incredible, the run we've seen in crude oil. Foreign exchange, we did see some recovery this week. I did a trade this week. I'll talk about it, pound against the dollar, and euro US dollar. I think these are interesting, just against, again, this backdrop about is the US dollar, going to stage some sort of comeback. So I thought that might be pretty interesting. So we'll have a look at those this week, but some recovery in sterling and the euro. That's it. Okay, we're going to jump into the live analysis now, but don't forget to find out more, go to the website, Capital.com. Okay, so that's who we're doing this with today. So go and have a look, download the app, open an account, blah, blah, blah. Right, let's kick things off then. Let's start off with, what should we start off with? Do you know what? Let's start off with oil for a change. We don't normally start off with oil, but you can see actually out of all the trades that I've got running at the moment, so just to explain to new viewers, we have this account that's a real account, and I use this for all the YouTube videos that we do. It's real money, it's Capital's money, it's not my money. And we do various trades on the YouTube market commentary stuff we do. And by far and away this year, you can see we're running at the moment £1,900 worth of open profits in crude oil. From various videos we did, 5th of Jan, 8th of Feb, 23rd of Feb, because the trend in crude has been so strong. So let's start with crude oil. Okay, let's kick things off and take a look at that one. Here we go. So we did this video yesterday, so it's all still pretty much fresh in my head for a change. So this week, on the 8th of March, we saw the price of crude oil almost get to $68 a barrel, so 67.81. Let's take this chart right out. So we're now trading on oil, or we have traded this week through these highs from April 2019 and back to October 2018 levels. So, in terms of major turning points, major resistance for oil, we're looking really up here, September 2018 levels, up around about, $76.80 was the high, so 77. So I think if you were really bullish on oil, be looking at this as a target up here, around about $77, if it can break through 70. So I think 70 is the obvious next hurdle for the price of oil. But you can see this trend. It's been an absolutely brilliant market. Since November, the price has almost doubled since November. $34 low in November, and here we are today, just below 66. So again, going into next week, we had OPEC reaffirming its plans to keep production cuts in place until through April. So that's clearly helped the price. Any weakness for now still looks to be a buying opportunity. And I know, plenty of people have been shorting oil on the way up, but it's a great example about how you should go with the trend. In hindsight, you should trade with the trend. And we had this sell-off 3rd of March. That was a really good opportunity when we pushed back briefly below 60 and the price has moved up. So for me, it's only if oil takes out the third week of Feb lows and the early March lows around $58 to $59 a barrel. If it slips below there, it looks like that trend is in trouble. But for now, for me, it'd have to be a buyer of dips in oil. So still really bullish going into next week. Or really interesting market and it's been great, you know, for this account. I moved all the stops up on the existing trades we had to $63. So got stops in at 63 on all of those. Let's see what happens. But some big moves in oil. So let's take a look at stock markets. Let's start off with the Nasdaq. So the Nasdaq, I think much was made that the Nasdaq had slid 10% and was in correction territory, which I think is pretty meaningless. I think whenever anybody starts getting overly pessimistic or optimistic about a market, like from a mainstream media point of view, it's exactly the time you want to think about going the other way. So we did have, I don't think all my data's loading on this one, but we did have, we've had this recovery. We've got trends in place all over the shop on the Nasdaq, to be honest. Here's one I've picked up on just from June, July of last year. Okay, the market dropped. The market punched as high as nearly 14,000, did lose 1,500 points. But we've seen really, there's really good support for the Nasdaq. 10th of December lows around 12,250. Big support again ahead of 12,000. I still think we will see this market have a look at the old highs. We've sort of, I did in the video I did this week, I talked a bit more about it, but I thought it was interesting that March the 4th, the market sort of trades down to 12,300. March the 5th pokes through it, but then recovers really quickly. So this when it comes to price action trading, this is the idea of price rejection, where the market gets to a level but gets rejected really quickly. And we saw that on the break of 12.3. And then interestingly enough, again, on the 8th of March, beginning of the week, the market trades down again to 12.3 and it holds. So clearly, really big support. I bought it this week in the video. I can't remember where we bought it. Let's have a look. 12.570. So we bought at 12.570 on the way up. So about here, with a stop somewhere down here. And the market's moved higher. So I think it's going to be a really interesting market to watch today. If you look at yesterday, so US stock markets finished pretty strong yesterday. This was yesterday's finish up here. Clearly, it's a 24-hour market. It trades overnight. Some of that euphoria about the stimulus bill has gone, and the market dropped a couple of 100 points overnight, the Nasdaq. So it'd be really interesting to see where it goes today. Personally, I'd still be leaning to be a buyer of dips today in stock markets. Let's see how it goes. S&P 500, the broader US stock market. There's our trend going back to the March lows from last year, March 2020 lows. Did a good job. I think, were we looking at this a week ago? We probably were. And I was saying, I hope I was saying anyway, just because it breaks a trend line doesn't mean that trend is necessarily over. It might just go up at a slower rate. And that has been the case. Yesterday, the S&P 500 hit a fresh all-time high. Yeah, again, we've seen this weakness overnight. But if we have markets hitting fresh all-time highs, it's telling you which way the trend is. And the trend is not down. The trend is most definitely up. So again, I think US stock markets will be interesting to watch today to see where they finish up. We'll look at the DAX, the German market. Then we'll take a look at the what's the other one? The Japanese market, the Nikkei. Then we'll look at some other markets. So the DAX, there's the DAX. So again, the DAX pushed up yesterday, all-time highs at 14,600. Again, it's backed off overnight, but lots of support. So for me in stock markets, nothing has changed. Still be a buyer of dips for stock markets. Let's take a look at the Nikkei. The Nikkei 225. Here we go. So again, the Nikkei has fallen out of its more accelerated trend during March. But for me, it doesn't really change anything. We got big support for the Nikkei. End of Jan, down at 27,500. So for me, I would be expecting these markets to claw their way back up to those old highs, the Nikkei and the Nasdaq. So let's see what happens. So stock markets, quite an exciting week, but hasn't really changed the overall theme, I don't think, for these markets. Let's take a look at gold and silver. Boring markets. I know I say this every week. Silver, for some reason, the most popular thing we do videos on. But it's been a fairly boring time. I'm not saying it's boring all the time, but look at silver now. Silver is trading at, 25.60. If we go back a week ago, silver was trading at 25.15. So we've been up, we've been down, but no real change. So for me, I still think it's bullish silver. You know, we've got this recovery off the March lows. It's having a little look at the trend, and a little blip below. Not much going on. There's a bit of chop going on. I would still be inclined to be a buyer on dips of silver. Stops, the closest I'd want my stop. I suppose a really aggressive place for a stop, the other side of the 5th of March lows at 24.80. I would personally have it the other side of the January lows at $24. For me, I'd still be a buyer on dips, but it just looks boring. You know, it has these moments of excitement, but a lot of the time, it doesn't really go anywhere. You know, silver is trading today, the 12th of March, pretty much where it was on the 28th of July last year. We've had a bit of noise in between, but no real trend. So I do think there are, at the moment, more interesting markets than gold and silver, but people like it. So that's why we cover it. You've got to give the people what they want. Gold, I think gold, medium term still looks weak. You know, we had these all-time highs in August last year. 2,075 was that the all-time high for gold. And since then, it just has not been able to build anywhere near that sort of momentum again. It's just really interesting. Last week when we were doing it last week, and this week as well, it slipped down to its worst levels since about June last year. It's still weak, I think. So gold, if we go back to that long-term trend we always look at on gold from August 2018, so we're 2.5 years into that trend. The long-term trend for gold is definitely up, but at the moment it's continuing to unwind. It's in a correction, you know. So where's it going to go? I suppose if you were wanted a really aggressive trade on gold, I'd be looking back to these old lows from April, so that last year. So these are almost, well, they're 11-month lows now, aren't they? From April last year, April 21st, day that Prince died, coincidentally. So April the 21st last year, the lows coming in around 1660. If I had to buy gold now, I would put my stop loss underneath those lows at 1660. But I just think there's no hurry to be a buyer of gold at the moment, because it's still clearly under pressure. You know, when we can see that from the, if you look on the hourly chart, you know, we've had, where were we a week ago? So March the 5th was about here. So a bit of it tried to rally this week, didn't it? And it's just given up these gains pretty quickly. So for me, I think it starts to get maybe a bit more interesting down here, because this was such a floor for gold at 1650, 1660. So it is interesting to keep coming back to, but I don't think there's any, well, not for me anyway, and clearly none of today's stuff is financial advice. I don't think there's any urgency to do anything, you know, because it's just boring. So let's see, let's come back to it. So we did gold and silver, we've done oil, FX, let's have a look at FX. What did I do this week? Pound against the dollar was a trade I did this week. I thought it was interesting. Did all right for 3 days. It's getting knocked back a bit today. But let's have a look at pound against the dollar. So if I drew this trend a bit differently. So it looks something like that. So we have the March 2020 lows. So it's a year ago now. The pound hit its worst level against the US dollar since the mid-1980s, down at 114. We've seen their recovery since then. Only in late Feb, traded up to 142.40, best levels since 2018, and it's sold off since then. But again, you know, as a trend follower, I have to assume any weakness we see is a buying opportunity. So I was watching it over the last couple of weeks, waiting for some stability. Clearly, this week we did have some stability. We had a couple of days where the market stopped falling, so I ended up buying in. I can't remember, 138.100-ish, 138.20, something like that. The market's moved ahead, it's moved down. I think it's going to be interesting next week. I think it's going to be a really interesting market next week, because we've got the trend line in place. We've got this Bank of England interest rate decision Thursday next week. We've got the US Fed interest rate decision Wednesday next week. So for me, my stop is down here, the other side of the 4th of Feb low, giving it a bit of wiggle room. But I think a more aggressive trade next week. Here we go. We've seen a really good trend, short-term trend. How is the pound going to perform if it slips back down towards these sort of levels? So I'd be watching sort of 137.80 through to 138.40 today and next week. So really interesting. I would be expecting it to bounce back, but let's see. Let's see what happens. I think if it loses that support, then we are going to push back towards 136. You know, we're still in that overall trend, but I think it's going to be really interesting week next week, pound against the dollar, with all the central bank stuff going on. Euro dollar. Euro feels a little bit laggy at the moment. Euro dollar, but you know, arguably from the March lows last year, we've still got a recovery going on. So we're a year into this recovery now from 106, 107. Still going up. Been correcting since Jan of this year. So I've been waiting for a buying opportunity because I want to try and trade with this bigger trend, but it keeps going down at the moment. Maybe we've seen an important low this week, but again, I think, like with the pound, what will be interesting next week, actually maybe it's holding already. If the market pushes a bit lower next week, do these old lows from this week hold? So I think for next week, sort of 118 to 118.80. So, 50 points to 130 points away from where we are now. Do we see those support levels hold? So I think, I think these pound against the dollar and euro against the dollar are getting, I think, really interesting again now. I would be expecting some strength to come back, I think, but let's see if they can continue to hold down here. And we should mention the dollar index, because I think it is a bit of a conflict at the moment. I've talked a lot about this dollar index on these live streams. And just to remind ourselves what it is, it's the US dollar against a basket of different currencies. So against the pound, the euro, the yen, the Swiss franc, some others, blah, blah, blah. So it's like an index for the dollar. It does what it says on the tin. Since March of last year, it's a market that's gone from 104 down as low as 89, 90, that sort of area. But for this year, it does look like it's trying to build a base and build a recovery. And this would be, of course, if we did see further US dollar strength from here, this would put pressure under so many other markets, the pound, the euro, gold, silver, all these different markets. So I think it's interesting. So if we saw this thing strengthen, the pound and the euro would go down. We're seeing it's quite, we saw weakness over the last few days, perhaps on the run-in into this stimulus plan, and a bit of a bounce back today. So I think it's another really interesting market. So I've got a mix of trades on at the moment. I've got long the Aussie dollar, long New Zealand dollar, long the pound, and also long a little bit of the dollar index as well. So it's almost like I'm more short the dollar than long the dollar, if that makes sense. But I think it's going to be a really interesting few weeks to see if we do see this US dollar make a comeback. I'll show you the New Zealand dollar, as I mentioned it. New Zealand dollar, US dollar. Basically, again, because the trend is clearly up. We don't normally look at this. But I did a trade in it this week, I just remembered. So I thought, well, let's have a look. So it looks like that. It had pushed out to its best levels since 2017. Got knocked back, the New Zealand dollar, but was holding above these old lows. So I bought it this week with a stop underneath these old lows, underneath 70.90. And it was doing well until today. So I'm just giving back some profit on a lot of these things today. But it's interesting, I think, what's going on with FX at the moment. Let's take a look at Bitcoin as we're doing that. Again, the usual disclaimer, I can't, because of the changes the FCA made, the Financial Conduct Authority, if you're a UK person trading through a UK regulated company like we are, and like I am, you can't trade Bitcoin on a derivative, on a CFD or a spread bet, because the FCA basically outlawed it. So, but I can still look at the charts of Bitcoin, but I can't trade it. I can trade physical Bitcoin, but not an averaged instrument. Did I say last week? Was it last week or the week before I bought Bitcoin? I can't remember. But on the breakthrough 50,000 or whatever it was, after not buying it for ages. I suppose it's interesting what's going on today. First of all, undeniably, the trend in Bitcoin is up. If we go back to October last year. We're in a clear uptrend for Bitcoin. It's accelerated since December. It's really accelerated like an absolute nutcase since December. The trend is up in Bitcoin. I think it's interesting what we're seeing happening today, because the old highs from the 21st of February, 58,300, we came back up to it yesterday, traded 58,100 almost yesterday, and has backed off today. If you wanted to go short Bitcoin, this is the perfect level to go short, I would say, because we can go short here, if you are allowed to go short, at 55,800. I'd have a stop loss at 60,000, for example, and maybe it pulls back down towards 45,000. But it's quite interesting. You know, we have seen in the past, if you look at what happened back here, we had that high for Bitcoin in early Jan at 42,000. Did come back up to it. Similar sort of thing, actually. Came back close for one day, backed off, then blasted through. It'll be interesting to watch Bitcoin today and over the weekend, because, of course, it's a weekend market as well, to see if it can blast through those levels, 58,300. If it blasts through there, I would expect it to be in the 60,000s pretty soon. But if you thought that Bitcoin has gone too far, it's a logical place to go short up here. So it's interesting. It's an interesting market up here. Let's see. Let's see what happens. So that's Bitcoin. We've done currencies. We haven't done any commodities, have we? I did a trade on sugar this week. I know we sort of dip into commodities now and again. Sugar, because the trend is up, basically. So I got some open positions anyway on sugar. Great trend in sugar. Gone from the April lows last year at 90 to, or 9, whatever it is. I don't even know what it is, to be honest. But traded, basically doubled into February this year. The price had sold off. Again, for me, we've seen a bit of stability over the last few days. So I bought in. Let's see what happens. So that's sugar. What else do we normally look at? Commodities. Copper. I think copper has been a bit quiet still. It's still a little bit quiet, copper. I think, again, the trend is undoubtedly still up in copper. We've got a bit of just a consolidation, haven't we, going on at the moment. You know, I still think we'll see further gains for copper from here, but perhaps it needs to unwind itself a bit more, you know, and pull back to where we were before it really started moving in early February. The last one we'll look at platinum, then we'll jump into the suggestions. Platinum's, it's been a funny week, platinum. Some quite scrappy trades. But again, I think we've got quite a scrappy trend going on in platinum. But if we lengthen that trend out, I am still long platinum for bits of it. You know, we could say our trend looks something like that, doesn't it? So for me, we did have, you know, it was really sort of plenty of momentum in February. I think that has gone. For me, I'd still be a buyer. The only question is, you know, do we want to be a buyer? If we get a bit of weakness next week, if we get a bit of dollar strength, it will put pressure on platinum. I don't want to be a buyer now. Personally, I'm probably going to wait and see what happens next week. So I think, you know, before we get into the other stuff, interesting markets to watch next week. Stock markets, because we're at all-time highs for the US, NASDAQ, not the NASDAQ, the S&P, the Dow, and the German, the DAX. So that's interesting, this stimulus plan coming through. And currencies, pound against the dollar, euro dollar, tried to make a comeback this week. Did okay. Are we going to see a dollar comeback over the weeks ahead? Let's see what happens. Anyway, let's jump into the questions. Before we do the questions, I'll just flash up the contact details. So again, to the platform I'm using is Capital.com. You can, any questions, I've got a Facebook page where I put in some sort of trading thoughts during the week. That's davidjonestrading.com. Quite easy to remember. Any questions you want answered by email, you can drop me an email, david.jones@capital.com. You can follow me on Twitter, @JonesTheMarkets, and of course, follow Capital.com on YouTube, Twitter, and Facebook. And don't forget the risk warning. Right, let's have a look at some of the markets people want looking at. Let's take a look. There's a really interesting one that came in before we started from someone saying, I keep losing money. Why does it allow me to be 10-1 silver? Of course, I'm going to get margin called. I always maximize the leverage. And this is, it did make me smile. I mean, it's not funny losing money, is it? But I think it's like saying, you know, you can go into a pub and you can drink everything. Just because everything's there on the shelves doesn't mean you have to drink all of it. The same with margin. Just because you can absolutely leverage yourself up doesn't mean you should. So I think if we're going to trade sensibly, I mean, let's pick a market. Let's pick crude oil or something. If we're going to trade sensibly, we need to have a sensible level of risk management and take sensible risk. So if I look in my account, so at the moment I've got £16,650 in the account, £4,200 tied up in margin. I've got 12 grand free for other trades. So I could go completely crazy and buy 3,000. No, actually I couldn't buy 3,000. Maybe 2,500 barrels of oil. Yeah, 2,500 barrels of oil at 11,000, and that would tie up 11,800 quid. So I'm using then pretty much all the margin in my account. If I put the stop loss 20 cents away, I'm risking 360 quid. Yeah, so it's quite a big chunk of risk of my account for a tiny move. And I think this is the important thing when you're trading. We need to be disciplined. And just because with CFDs and spread betting and everything else, you can leverage yourself up, you shouldn't think you have to. Okay, so self-control is a very important part. So someone mentioned a couple of CFDs. I'll take a look at a couple of them. I know this one because this is one we looked at when we looked at marijuana stocks. I can't remember when we did a video on marijuana stocks. I think it was in January. But I thought it was interesting. This is MJ. Is the short code for it, which is marijuana, obviously. Good bit of code in there, but it's the ETFMG Alternative Harvest ETF. All right, so it's a legalized drugs ETF, and it's interesting because it's a way of getting exposure to that sector of the US market. Went absolutely crazy from January. So the ETF went from 14 to 34. So we saw that 150% move in the ETF. It's come back to it in Feb about a week ago, down to 20, and we're currently trading at 23. I think the trend is up. I think that the trend is up for that. So regardless of what it is, I'd still be looking to be a buyer of that. I think it's a really way. I mean, I don't know anything about that market, but it's an interesting way of getting exposure if you thought there were more gains to come in the whole legalized cannabis and everything else market. So there you go. That's the MJ done. The other ETF that always gets a lot of what's the word I'm looking for? Attention, is the ARK ETF, isn't it? I never know which one it is. Is it this one? It's the one that was. This lady's got an awful amount of fantastic coverage, because she's been seen as quite visionary with what she's done. Is it Kathy Wood, isn't it? I'm thinking who runs the fund, the ETF, and big holdings in the likes of Tesla and everything else. Does it say in here? Long-term growth, blah 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 blah. Anyway, big holder of Tesla, but again, the ETF, from last year, the lows last year went from 33 to 160. As a lot of these tech stocks have come under pressure in the last few weeks, the ETF has got clobbered, not surprisingly. Going from 160 down to about 110, so losing 30% in 2 or 3 weeks. So it's an ETF. An ETF is an exchange-traded fund. If you're not sure what they are, it's a thing that invests in a basket of different stocks. Yeah, so it's a way of gaining exposure to a part of the market. But the ARK ETF is always an interesting one to watch, and it's almost like a barometer for the Nasdaq. So that's the ARK one. So again, I think well worth keeping an eye on. Someone said let's have a look at LSE, which I'm guessing is the shares of the London Stock Exchange. I'm guessing is that what it is? What's happened today there? That's an interesting one. And why has that got hit so hard? So the LSE, blah 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 blah. Is that the right listing I'm looking at there? Have they done? I wonder if they've done some sort of share split or something. Just hold on a second. It seems a bit strange because I never follow news on individual stocks. It seems a bit weird that they've been hit so hard. I'm wondering if something's happened there. Let me just bring it up on something else. If anybody knows what it is, feel free to let me know. And then they have taken a bit of a hit. Hold on a second. Let me see if I can see what the news is. Is it something to do with, I don't know, I can't find it. I've got too much news. Anyway, no idea what they've been hit as hard as that. If anyone does know, let me know. But I think it's interesting. I think there must be some technical reason for that. I find it hard to believe that the London Stock Market Group has lost 25% of its value in a couple of days for no reason at all. So let's come back to that. Let's see if somebody can find the reason for that. Was there some shares issue or something going on? But either way, the trend still looks pretty positive. The trend is up, and it's interesting down at these levels. But if anyone knows any news, let me know. Okay, let's see. What else have we got? Natural gas. I did have a trade on natural gas in my own account. Came out of it this week at break even. I am thinking about buying back in again. I wondered if today was the day. So I've said before, I find it quite a frustrating market at times, trading natural gas. It can get really volatile once it starts moving. We had this great run from last year, from June last year, around 150 up to 340. It was correcting, blah, blah, blah. I think I ended up buying in here somewhere. We had good support running from 218. We've still got it on natural gas. Rode it up a bit, moved my stop to break even, came back down, got stopped out this week. But I wonder if it's a buy again, natural gas. I'm quite tempted to be a buyer, but it's just gone boring over the last 5 days. So for me, if I was a buyer now, I would probably, the closest I'd want my stop is the other side of those January the 22nd lows, about 242. But for me, the better opportunity is if it sells off back down to those late December lows. So it's a bit of an odd one, natural gas, for me at the moment. I do still think it's more up than down, but it's just a little bit stuck in the middle, I think, at the moment, natural gas, isn't it? So let's see. Let's see what happens. See if it gets a little bit more interesting. PayPal, someone said. Let's have a look at PayPal and Ethereum. I can't actually look at Ethereum on this platform, but what I'm going to do, I'm guessing, like I've got another Capital.com account I use. I don't know if I can actually use it. Oh, I can't bring it up on it. Oh no, I'll bring it up on something else. But PayPal, let's have a look at PayPal first of all. Good trend in PayPal. Great trend in PayPal. So that's going back to March last year. So we're 12 months into this. I suppose a bit like the Nasdaq, got knocked back over the last few weeks. Really not rock solid. No support is rock solid, but pretty good support for all this year. The lows for this year, let's call it 220, 225. Had a little look below it, the 5th of March a week ago. So for me, I would be definitely thinking about being a buyer. Thinking, well, where does my stop loss go? The tightest I'd want my stop, if I was a buyer now, the other side of that 5th of March low, which I think probably has been the low for the year so far. So that low was 222.88. If you want to be a bit more conservative, go the other side of December lows. But for me, that trend is up. No market moves in a straight line. We've had a correction after a big run up in Feb. We've come back down. So for me, I'd be a buyer with stops somewhere, the other side of 220 or the other side of 200, something like that. So I think it looks interesting. What else have we got? ETFs, TAN and ITB. TAN, what's TAN? No idea what that one is. I think often it can be a bit confusing because our codes won't tie up with. I'm putting TAN in something else, and I'm getting Tanfield Group, which is some UK listed company. So if you're going to put the things in, if you can put the names in, so I know what they are. What's ITB? US Home Construction. ITB. Hang on a second. Do we cover it? Let's see. US Home Construction. No, I think that's maybe a bit too specialist. So we can't look at those. Gold. We looked at gold. Clean energy. QCLN and ICLN. QCLN. There we go. First Trust Nasdaq Clean Edge Green Energy Index Fund. So this is one for the hippies who want to make a little bit of money. But with those sort of returns, let's not knock it. So March last year, about $17 a share. February, $90 a share. Great little run there, isn't it? Well, more than a little run. Obviously, let's take a look. Let's take a look at that. So, so for me, I'd still be a buyer. I think again, it's clearly lots of volatility. A market that goes from February the 10th high, nearly $90 to below 60, less than a month later. Loads of volatility, but the trend is still up. I'd still want to be a buyer. Again, for me, the closest I want my stop, if we would take the view that the move, the 5th of March, which was only a week ago, the move to 58.60 was overdone. Put your stop below there. But it's really interesting that actually. What goes into this? Hang on, let's have a look. What was it? What was the code again? We haven't looked at these before. QCLN. Let's see. Hang on. I could type it. QCLN. So if on the right-hand side, it can often give you a bit more information, but not much here actually. The fund seeks investment results correspond to price and yield, blah blah blah. Okay, the performance of clean energy companies that publicly trade in the US. Blah. There you go. Interesting one. Good little spot that one. ICLN. Global. Oh, okay. iShares Global Clean Energy. So similar sort of moves. So this one tracked the S&P Global Clean Energy Index. Really good. Lovely, lovely trend last year, wasn't it? Look at that. Fantastic. And again, a bit volatile so far this year. It's an interesting one, actually. The iShares one is an interesting one. Pokes up to 34 early Jan. So it had lost $12, so it lost about 30% into March. Let's come back to it in a week's time. I think that's really quite interesting one down here, isn't it? 20-day moving average. It's done a pretty good job. Let's see. I could be quite. If we see it maybe trying to build some sort of a base down here. Ahead of sort of 2022. Let's come back to it next week and see what happens. Do we cover uranium? No, we don't. We don't. I think we looked at that before. Actually, I didn't know you could actually trade uranium. But a uranium participation. What's that? An investment holding company invests in assets substantially in uranium oxide and blah, blah, blah. Well, there you go. I suppose that's one way of getting exposure to it. Uranium participation. Never looked at it personally. It's been a little bit crazy since March last year, isn't it? It's been broadly sideways since May. It's not actual uranium, but it's not uranium doesn't appear to be one that we cover just yet. But never say never. GameStop. Just like I say again, GameStop, fruit machine stocks. If you're in it, good luck to you. But I think in terms of trying to apply any logic to GameStop, I was looking. Was it yesterday or the day before yesterday? It was the day before yesterday. I happened to look at it, or someone put something on Twitter. You can't trade something like this, right? Well, I can't trade. Something like this. I am not talented enough to trade something like this. 5:15 UK time. $340 for one share of GameStop. 5:45 UK time, $180. So it loses 40% in less than 30 minutes, and then it bounces back. Complete lunatic, fruit machine stock. If you're in it, good luck to you. But who knows? You could say this time next week it will be at 480 or it will be at 80. That's the band. So I don't think we can apply anything sensible to that. We looked at silver. Yeah, silver's boring. Looked at silver early on. It's a very boring market at the moment, silver. But broadly, the trend is still up. Euro against the Turkish lira. Let's have a look at it. Daily chart. I don't know. I think we looked at dollar against the Turkish lira a few weeks ago, didn't we? But we are clearly, when we're seeing the chart going up, what we're seeing is euro strength. So that this is going back to 2016. This chart. So euro Turkish lira. The broad story is of continued Turkish lira weakness. We did see a bit of a comeback since November, but again, at the moment, you'd be a buyer, wouldn't you? Or I would be a buyer. You'd be a buyer of the euro and a seller of the Turkish lira. And I suppose Again, it's not a market I've ever traded, but you know, the stop, you put your stop the other side of the Feb lows somewhere, I think. So yeah, longer term trend is expected to resume on that one. Euro, New Zealand dollar. Never looked at that one either. Let's have a look. Euro, New Zealand dollar. Oh, it looks a bit messy, doesn't it? I don't know. I always, it's a bit like Euro sterling. I always struggle when I look at Euro sterling because it always looks to be a bit of a scrappy old market. So I suppose you could take the view historically, whenever the euro has drifted down to where we are now, near enough against the New Zealand dollar, the buyers have come back out, haven't they? So whilst the trend is down, if you were suddenly thinking about moving your money into euros from New Zealand dollars, this looks like a good place, you know. So because it's been a floor, 163, has been something of a floor for 3 years. So it's interesting, you know. It's been clearly the euro has been really weak since 2020. So for when's that? Just over a year now. Well, it is a year, isn't it? March last year. But maybe we'll see a turnaround for the euro against the New Zealand dollar. Let's see what happens. US dollar basket, we looked at that. China A50. Let's take a look at that. The China A50. FTSE China A50. I don't remember this because we did this. We did a video the other day. Can't remember where it was. On, what was it called? How to trade the global economic recovery. That one there. We looked at the China A50 in that. And I thought it was interesting because it was right on that trend line. And again, I think just because the trend line's broken. So this is FTSE China A50. So it's Chinese, top 50 Chinese blue chip stocks that have A shares. And I thought it was interesting that it had backed off so much from the mid-Feb high at 20,700. You know, it dropped to 17,000, so it lost, what, 15%. And it slipped below the trend line. But I do wonder, you know, just because something falls below the trend line doesn't mean it's going to go bang and just sell off. I wonder, does it maybe start to make a base down here? You know, I think it might be an interesting market to watch. So for me, I'd sort of be thinking about being a buyer. I wouldn't really be in any hurry to buy, but I wonder, do we see after a bit of a crazy run late December and into mid-Feb, do we see a bit of stability for the Chinese A50 down here and it start to build a base? Let's see what happens. But an interesting market to keep an eye on. AstraZeneca, we've looked at those before, haven't we? AstraZeneca. Still weak. I remember being surprised because again, you would think because of the virus, the vaccine, I should say, and everything else, you'd think they'd be a bit more exciting, but they're not. They're just losing ground, aren't they? I think you know, they're just still weak. AstraZeneca. You know, we've got big support from the lows last year at 58 to 60 pounds a share, but still weak for now. That trend definitely still down. You know, despite all the vaccine success and everything else. If you're really hard done by, wouldn't you? If you're an AstraZeneca shareholder, you think your company you got shares in has actually solved one of the biggest pandemics we've had for centuries, and the share price still goes down. Just there's no pleasing markets, but still looks weak. I think still looks weak. AstraZeneca, but no, it doesn't really look very exciting. I don't think. FTSE 100, good one. I got a trade on the FTSE 100 from I can't remember when, a few weeks ago. I think it's positive, and it's not surprising, is it? You know, given, you know, Dow Jones hits all-time highs, the DAX, the German market, hits all-time highs, the S&P hits all-time highs. The FTSE is the lagger as usual, but it is, of course, still more up than down. You know, we do have, you know, I think we've had good support at 62.50. I'd say, you know, the medium-term target, assuming we're going to see all this strength continue, is for a run back up towards 7,000. You know, but I think it's still broadly positive. But it's just boring again, isn't it? Look at it. The FTSE, again, is where it was a week ago, pretty much, or where it was the beginning of the week. You know, it's hardly moved much this week, the FTSE. But you know, it clearly is. There you go. That's what it looks like. So where was the beginning of the week? Here somewhere. So it's slightly higher for the week, but it's been pretty painful. Been a bit like watching paint dry the FTSE this week, but still positive. I'm still long the FTSE, so I'm looking for 7,000 plus, and if it can break there, hopefully it gets a bit more interesting. Royal Mail. I've got shares in Royal Mail. I think like a lot of people have from the flotation, and they've been recovering, haven't they? After getting absolutely clobbered. There you go. Absolutely clobbered all the way from £6.20 down to £1.50. Didn't have a stop loss on those because I forgot, like a lot of people. You sort of buy them and forget about them, don't you? Because it's a flotation. But it's done great since then. Who knows why? Trend is still up on Royal Mail off those lows. Let's see. Let's take a look at that. It is a bit surprising that the Royal Mail has done so well. But online deliveries maybe is the easy answer there. But I don't know. Who knows what it is? You know, all the stuff getting delivered everywhere. But I've been starting to get maybe a bit nervous again now. I mean, where did they top out last time round? Just above £6 a share last time round. So the trend is still strong. So, you know, again, it'd still be looking to be a buyer in dips for Royal Mail. But I just wonder if, you know, given the rate of growth, they've doubled. The share price has doubled since November last year. Perhaps we do a bit of consolidation, but for now, at least, any weakness looks like a buying opportunity. Sterling against the Swiss franc. Then we'll look at sterling yen. Sorry, something just fell down. Sterling against the Swiss franc. There we go. Really strong, isn't it? It's a really good run. Sterling against the Swiss franc. It hasn't actually. It's quite interesting this week. If you look at all of this week, it sort of feels like it's moved higher, but it hasn't. It's had goes at sort of breaking higher, but we haven't had any follow through. But you'd have to say, or I'd have to say, that trend is definitely up. Still be a buyer on dips. You know, clearly we're getting into what has been the danger zone, going back to 2019 for sterling Swiss franc from 130 through to 134, where we've seen the sellers come back out. It does feel a bit like sterling yen, which we'll have a look at in a minute, that it needs perhaps a bit of a shakeout and a bit of a sell-off, and then we can resume more normal trend, because it feels like it's getting a bit tight. But again, the trend is still up. Sterling yen, which again, I think, you know, I've got 2 trades running on sterling yen now, and only did it because we covered it in a live stream. I looked back, I did the first trade on the 11th of February, so it was a live stream before that. So again, sterling, it's been a dream this week. It's gone up every day, apart from today. So sterling yen, still strong, pushing out to levels not seen since 2018. Again, feels perhaps getting a bit overextended. You know, look at the state of the RSI down here. Very, very overbought RSI. Lots of bearish divergence going on. The market's still strong, but perhaps it needs something of a bit of a flush out at the moment. Tesla. Oh, we didn't look at Tesla. Let's have a look at Tesla. Let's have a look. I think there is going to be a buying opportunity for Tesla, but I don't think it's yet, you know, personally. But who knows? I think it's almost like it's a bit too easy that Tesla goes from 890 in January to 560, touches the trend, and bang, bounces back again. So I do wonder. So for me, because I did sell, I think I said before, my massive holding, 2 shares in Tesla. I think if we drift back again to $600 and get a bounce, I think that could be interesting for me. So I do wonder if we see Tesla under a bit of pressure again next week. But clearly, again with Tesla, the trend is up. You know, we go back to last year. The March trend support coming in at 520. You know, I think 500, big psychological area. Currently trading at 672. I suppose, I mean, I wouldn't go short because the trend is up, you know, but I suppose in a really aggressive trade. It's funny, scrappy little trading that's going on. Oh, is that out of hours? So that's out of hours trading. Okay, so funny little scrappy trading going on is the out of hours stuff. I suppose an aggressive trade would be to go short Tesla here with a stop above 720. Also those highs back there. But I think that maybe, I don't know, maybe we see it, have another look at the lows from earlier in March, Tesla, but that big trend's still up. I just lost myself. in the questions. Sorry, hang on a second. China 050. Euro sterling. Let's have a look at euro sterling. So I've been going for about 55 minutes, so I'll do another 10 minutes or so. Then we'll look. I mean, euro. I remember this from last week. Actually, I remember saying last week, perhaps the aggressive trade is to be a buyer. And clearly, if I'd have done that, I'd be losing money. But I wondered last week, the aggressive trade was to be a buyer with a stop loss under the recent low. So actually, it makes it even more valid this week, I think, because we're seeing this strength today in the euro. I think it's an interesting one. I like this sort of a setup. I'm often too impatient to actually wait for it. Where the market hits a level, moves away. So clearly, we had a big change in sentiment, euro sterling, the third week of Feb, from 85.40 through to 85.60. Runs up, comes back, and we're seeing buyers come back in. So I suppose let's do that trade. Let's do that trade on euro sterling. We haven't done a trade today. What was the low from last week? 85.38. Okay, let's go 85. 85 is our stop on euro sterling. So what I'm going to look for, I'm looking to see if we get a recovery from here. We're going to get maybe a double bottom going on in euro sterling. Let's do the trade. So we're going to put a stop loss at 85, 0.8500. We'll risk losing £100 as usual. Oh, that's pretty much bang on. That'll do. Let's buy it and see how that does. So we bought down here. So I'm wondering, we have seen this old sort of spiky low from the 24th of Feb hold. Let's see what happens. We'll come back to it next week and see if it's moved a lot higher. How much, blah, 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 blah. What else have we got? Euro sterling, looked at that. Dollar South African rand. Let's have a quick look at that. Dollar against the rand. I don't think we've looked at that before. I think we have looked at this. I think this is interesting because I think we've got a whole load of stuff going on here with dollar against the South African rand. We got our downtrend going on like this. Okay, and it looks a little bit, I suppose, like the dollar index, like that DXY market, where clearly great downtrend for the dollar against the rand. So when we're seeing the market falling, this is dollar weakness and rand strength, and we saw the dollar try and break out, and again it just feeds back into this story. Are we seeing a US dollar recovery? So for me, the trade I would be tempted to make on Monday, assuming that today ends something like it is now, I'd be tempted to be a buyer of the dollar against the South African rand with a stop loss underneath those lows. So those lows are ahead of 14.30, something like that. The market's 15 and a bit at the moment. So I think it's really interesting. And it does tie in, I suppose, with these lows back here. It's actually a really interesting market. We have to come back to it. Let's come back to it in a week's time and see what's going on. But again, it does all tie up with, do we have a dollar recovery going on at the moment? Am I stupid to lock my interest rate on my property with a 10-year loan at 1.83%? I'm worried over inflation. I've got no plans of moving. I've got no idea, to be honest. I don't know. Sorry. But good luck. Good luck, whatever you decide to do. We looked at the FTSE, Tesla. We looked at Tesla. How much do you bet on average per trade? It's a very good question. I've got a very strict approach to risk management. If you watch any of the videos that we've done on, like the one earlier in the week on the Nasdaq, at the moment my risk per trade on this account is 250 quid. It probably should be more, but if you look at the balance of the account, is £16,600. So I'm risking losing roughly 1.5% of my account value on a trading idea. Yeah, so if I was to buy dollar rand with a stop at 14, for example, so I put my stop in, and I do this for all my own trades as well, put it stop in at 14, right, I only want to risk losing 250 quid. At the moment, if I get stopped out, I'm going to lose 12.5 grand, so I'm clearly trading a little bit too high. So what I need to do, if I trade 5 grand, there we go, if I trade 5 grand of dollar rand with a stop at 14, my risk is 247 quid. So that this amount is always fixed, so I know how much I want to risk losing on a trade, and it's always a relatively small percentage of my account. In this account, it's 1.5%. In my own account, it's a bit more aggressive than that, but not crazy aggressive. only 2.5%, something like that, and that's it. Yeah, but again, I think that the guy who right at the beginning who said I always end up losing money because I use all the leverage in my account. Well, that's crackers, because you're risking losing maybe 20-30% of your account on any one trading idea. So I think keep the risk small is the thing to do. Right, I think we're going to start wrapping things up there. So apologies if I didn't get to your question, but we've got to wrap. I think people do get a bit bored after about an hour. That's it. Do more lengthy live stream videos. Yeah, maybe that'd be a good idea. Maybe we do more live streams during the week. Because they are. Thank you very much for the support. They do prove popular. You can always watch the recording if you can't make it live. So let's see what happens. Someone's spamming it again. Okay, so we'll wrap things up there. If I didn't answer your question, if you got a general trading question, I've lost the presentation. Feel free to either go to my YouTube page, not YouTube page, Facebook page, which is davidjonestrading.com. You can email me, david.jones@capital.com. Go to Capital.com to find out more about the company and the trading platform. Follow me on Twitter @JonesTheMarkets. Make sure you subscribe to our YouTube channel, because we push out 3 different videos during the week on different markets. We'll do it all again next week, this time next week, 2:30 next Friday. So I think there's a lot to watch next week. Stock markets, because we had this stimulus plan. Let's have a quick look at what stock markets are doing in the US. We had this stimulus plan. I think we could see stock markets bounce back today. We've had just nothing much in the hour we've been doing this, but I think that's the S&P. Be interesting to see if stock markets bounce back again. Bitcoin, if you like cryptos, because it's knocking up near its previous all-time high. Pound against the dollar is interesting next week, getting slammed a bit today. Had a good 3 days this week. So I'll be watching the euro against the dollar, pound against the dollar, and stock markets going into next week. But we'll do some more videos and we'll see where everything is. Thanks for coming along. Enjoy the weekend. Any questions, let me know. My Facebook page is davidjonestrading.com. Email is david.jones@capital.com. And that's it. Okay, thanks for coming along, and we'll do it all next Friday.